So one of the things that come up a lot is, why do I stay away from trading on Thursday and Friday, or even the afternoon session on Wednesdays on the first week of each month? And it's only to do with the inconsistencies with the market symmetry and the things that I call a signature and price action. They will come in and out. They'll be hit and miss type setups. I've learned over the years that it's just better for me not to take these trading days with live money, because the probabilities are much lower than they are when they're not on those particular days. Not the same as like a FOMC. Like an FOMC day, I can sometimes do go in after the FOMC announcement because it's created volatility. But ahead of the FOMC, I won't be in front of that, because it's basically a gamble. You don't know what they're going to do. For non-farm payroll, the elements about that week and what you've learned hopefully this week was that in the beginning of the week, this is what I teach my students, that Monday, Tuesday is kind of like your honeypot. You want to go into the market looking for your setups there. And if you don't find it, try to force it. You don't insist upon taking a trade. But if it presents it, you try to take it then. And then at the New York session on Wednesday, that's like your cutoff time. It's closing time. If you want to go in after that, just know that you're gambling. You're not doing what I've taught you and high-fiving me and putting up your trades and tweeting to me saying, thanks ICT, me for that, because I told you not to do it. Okay, so if you made money, that's on you. And if you lost money, guess what? That's on you too. But I see a lot of folks that will post, hey, what do you think about this? What do you think about that? And apparently they're not listening, because here's what I think. Well, on Thursday and Friday, you shouldn't have been trading. That's what I think. And what do you do on those days? Well, basically, you're students, okay? You're learning. And even if you've been trading for a while, if you're listening to me, you are a student, okay? You're learning what it is that I do, whether you're going to use it or not. You're a student. So you don't want to be doing the things that I'm telling you not to do, because if you do that, you're wasting your time under my tutelage. You're not going to benefit from it. Apparently, some people like to come and they'll say, hey, look, ICT says don't do this, but I made money over here. Okay, that's fine. When it rains on everybody. Okay, that doesn't mean that you did something right that day. It just means that when I first started making money years ago, back in the 90s, I had 9 months of sheer luck, folks. And it's not painful for me to say now. It was painful at the time to admit to myself that I wasn't as good as I thought it was. Like, I thought that books that I purchased and VCR tapes and CDs and everything else. Well, not CDs, but DVDs were coming up then. And I thought that logic was building me into a juggernaut. And, well, the only thing that was a juggernaut is how fast I blew the accounts. Because once the market started going into a trader's environment where everything stopped going parabolically one direction up, I discovered that I didn't know how to trade. And that was very painful to watch me blow not 1, not 2, not 3, not 4, but 5 accounts. 5 accounts in 1 year in the 90s, trying to force what I thought the books were working for me initially with. And it's a terrible experience. But when I tell you these things, what to avoid, what not to be doing, and then I see folks going out and doing the very thing I tell you not to do. And the worst thing that can happen is for you to find short-term success doing the things I tell you not to do. That's exactly the equivalent of what I was doing for 9 months in 1993. And it was not skill. That was luck. And you were lucky if you made money on Thursday. You were lucky on Friday if you made money. Now that the dust has settled, it's Saturday. If you look at the 5-minute price action on the E-mini S&P, now I don't have a chart in front of me, but I know what it looked like. It was very boring, very sloppy. Yes, there was a setup. Yes, there was a few tiny little scalps. But if you were in there looking for a particular run, that would be framed with a larger degree of probability, not something just on a 1 minute basis.